I want to talk markets this morning with Sethi, managing partner and portfolio manager at DCLA, as well as a CNBC contributor. We do have a whole slew of earnings, Sethi, to get to this week. And I'm curious, really on Friday and this morning, how you're thinking of setting yourself up ahead of them.
You know, I think Friday, when you looked at it, was a little unexpected. I mean, the bank earnings that came out were much more positive than people thought. So we've got a little bit of a headwind, a tailwind going into earnings. But I wouldn't take that. I would take that all with a grain of salt, Andrew. I think we're going to see earnings come down. People are still waiting for the Fed or hoping that the Fed is going to either stay where they are or cut rates. But I don't really think that's going to happen in the near future. So you really... Positioning is going to be really important. And for us, I think you've got to be in areas where earnings are going to be strong. And those are kind of a couple of defensible areas, consumer staples and healthcare.
When you looked at those bank earnings on Friday, how much can you think you extrapolate out to the other banks? We're just hearing some of the other regional banks, M&T this morning. Looks like their deposit base is pretty strong. It's holding in there at least. When you think about some of the other banks, Comerica, some of the others we're going to hear from later this week, what's your expectation?
I think the super regionals and the really big majors are going to do just fine, like we saw on Friday. I think where the worry is going to be in the mid-size and the smaller community banks. That's where you're going to see more of the deposit base move. That's where you're going to see some of the lending also lessen. And in that case, that's going to hurt their bottom line. Earnings are going to get hurt. Their capital base is going to get hurt. So I'd be careful there. I think the world's changed when we had the issues with Silicon Valley Bank. So I do think you have to be careful. And I think the larger banks in this area are going to do better down the road.
P&G. We're going to get P&G this week. So far, P&G has done a relatively I don't know. It depends which side of it. I think for shareholders, you could say a masterful job of maintaining margins. Do you think that they're going to be able to maintain margins in this market? We heard from Andy Jassy on this broadcast just last Thursday that people are trading down.
I think P&G has really changed their whole company. They're really focused on a smaller group of products, which I think is going to help them. And really, this is the staples area. Obviously, the company's not trading it at a discount, but I think that's where you could be a safe harbor. They've got global growth. They're in all over the world, and I think they've got really good brands. Now, the question again is valuation. And Andrew, that's where kind of I want to come back to is you really have to know what you're owning, and you have to know what the valuation is. Even in some of the staples, you have to be careful, but I think earnings and expectations going forward are going to be very important for certain stocks, especially the ones that are held by a lot of people.
Talking about one that's held by a lot of people, we'll hear from Tesla this week. What do you anticipate? What do you think of the company these days?
Look, I think Tesla's a great company. The question is going to be margins. Can they maintain their margins? We saw them cut costs in terms of so that they could increase sales. But I do think margins are going to be tough. And if you look at the valuation, you look at a Tesla compared to any of its peers, it trades at such a super premium. So any misstep on Tesla, and we saw that just a few months ago when the stock got cut in half. So I'd be careful here. It is a great company, but in terms of valuation, everything has to line up. So I think that's where investors need to be a little more careful.